Hello everyone, this is Abhijit Misra and welcome to this new video. In this video, I'll be discussing about the balance sheet or how to analyze the balance sheet. So this video is useful for those people who wants to go to the screener.com and who wants to understand the balance sheet of an organization. And remember one thing, this video is not for the professional courses like CA, CMA because I'm not going to discuss in detail. So this is basically for the common people who wants to go to the skinner.com or the similar website and they want to understand the balance sheet. So let's get started. So balance is basically consisting of like two things that basically shows us your asset and also your liability. So let's come to the asset first and discuss about the asset. So here you can see I have taken the balance sheet of the Reliance Industries for the financial year 2020. So that is basically the balance sheet as on 31st March 2020. And here I am going to discuss about the asset. What are the components of the asset? So first thing, the asset is basically divided into two categories. One is non-current asset and second is basically your current asset. So it may be confusing what is the meaning of non-current asset and what is the meaning of current asset. So remember one thing. So non-current asset are basically it is very difficult to convert into cash. Example, in your house, you have a house property. Take the example, you have a house property. Is it easy to convert into cash? No. You have a car. Is it easy to convert into cash? No. Take the example, you have invested some amount of money in the stock. Is it easy to convert into cash? Yes, it is easy. If you have invested some amount of money in the fixed deposit, is it easy to convert into cash within a few days? Yes, it's possible. So that is basically the car or the house property that is basically called as the non-current asset, and the cash or the fixed deposit and the investment in the stock that is basically called as the current asset. So that is basically the common understanding. Here if you see in case of Reliance, in the asset basically I have taken the non-current asset is basically consisting of property, plant, equipment, capital work in progress, intangible asset under development, same as the financial asset like investment, loan and other non-current assets. So these are basically all the categories. Let's understand about the property, plant, equipment first. So this is basically the asset register of the Reliance Industries here. So here I have taken the property, plant and equipment. So all the things, capital work in progress, everything is coming here. So the property, plant and equipment, what are the things are coming? Basically coming the land, building, plant and machinery, electrical installation, equipment, furniture, fixture, vehicle, ship, aircraft, everything. Like whatever the Reliance is holding, like as a asset, take the example, vehicle, aircraft, ship, a factory, a building, furniture, everything is coming in the property, plant and equipment. The second thing is basically capital work in progress. What is the meaning of capital work in progress? Take the example, Reliance is constructing one new factory and where the production has not started, so the building work is just completed. So that is basically called it as capital work in progress. That means investment has already happened in that asset, but all the activities, all the construction has not completed for that asset. That is basically called as the capital work in progress. In case of Reliance, if you see here, the capital work in progress and intangible asset under development includes 2348 crores on account of project development expenses. From the common understanding, what do you understand? So if any amount of money is sitting in the capital work in progress, that means in future the capital work in progress is going to become a asset of the company. If it is a production oriented asset, take the example, this capital work in progress is converted into a factory where they're going to manufacture some amount of goods or something and they're going to sell in the market. So that is basically a revenue generating source. That is a good news. So that you have to understand ki if a company is investing money in some amount of money in the capital work in progress, or the company's fixed asset is growing, it means company is expanding. So that is the second thing. And third thing is basically intangible asset and intangible asset under development. So intangible asset, here you can just come here, you can see. So in case of Reliance, what is coming actually? In case of Reliance, it is coming technical know-how, software and development right. Okay. So the three things is coming. If you see here, technical know-how, software and development right. So these three things are coming as an intangible asset. Same manner, intangible asset under development means like same manner, take the example, Reliance is developing some new software and which is under development. So that will come as an intangible asset under development. So that is all about the asset, you can say. That is all about the fixed asset category and intangible asset category. The next category is basically financial asset. In the financial asset, two components are coming. One is coming investment and second is coming loan. So let's understand what is the meaning of investment and what is the meaning of loan. So if you see here, investment is basically, take the example, Reliance has invested some amount of money in one of his like, take the example, one of his subsidiary, or they have invested some amount of money in the bond debenture which is payable after 10 years. So that will basically come here. Same manner, loan is basically if Reliance has given some amount of loan to any third party, that will also come here as a loan. And other non-current asset, basically any asset which is not coming in this category, that will come as a other non-current asset. Take the example, in case of Reliance, the other non-current assets are coming basically capital advances, advance income tax, all these things. What is the meaning of capital advances? Take the example, Reliance wants to purchase a huge machinery or huge what I can say factory. So in such a case, that is basically called as capital advances. If any advance we have paid to purchase a capex or a fixed asset, so that is basically called as the capital advance. Same manner, advance income tax is basically as if Reliance has paid some amount of money to the income tax authority as a advance income tax, that will basically come as a other non-current asset. Now we have already discussed about the non-current asset. Let's understand about the current asset. So in the current asset, the first thing is coming as inventory. What is the meaning of inventory? Inventory includes raw material, work in progress, and also finished goods. So take the example, like I have a like garment shop. In my garment shop, I have to keep certain garments every time so that the sales will happen. So that is basically called as the inventory. So in the garment shop, what are the garment I'm keeping? That is basically called as the inventory. Same manner, in case of Reliance, what are the raw material, what are the work in progress, and what are the finished goods it is keeping? So that is basically called as the inventories. Same manner, if you see certain financial assets are also coming. What are the financial assets? One is coming as an investment, trade receivable, cash and cash equivalent, loan, and other financial asset. So what is the meaning of investment? Investment means like if Reliance has invested some amount of money in the share or in debentures, that will come as an investment. Trade receivable is basically Reliance has to receive some amount of money from its customer, so that is called as trade receivable. Cash and cash equivalent. Cash and cash equivalent is basically anything which is equivalent to cash or which is easily convertible to cash. Same manner, loan, basically if Reliance has given some amount of loan to any third party, so that will also come as a here. And anything which is not coming in the other category, so that will come as a other financial liability, and also then after other financial assets. So that is all about the asset category. What we understand, asset is basically divided into two categories. One is non-current and current. Non-current is basically it is not easy to convert into cash. Current is basically it is very easy to convert into cash. A common understanding. So in non-current, what are the things are coming? Property, plant, equipment, capital, work in progress. If it is there, positive news. If the property is growing, plant equipment is growing, that means company is expanding. Intangible asset is basically all the intangible asset the company is having, that is coming. Financial asset is basically a loan, investment, like we have bank or the company has given. It's the more risk area, you have to dig into that. If the company is giving loan to any related party, any director or any auditor, that is the bad news. So you have to understand, we'll analyze later, but for the time being, now you understand all these things. So current asset categories, one is inventories, financial asset में आपका क्या आ गया, like investment आ गया, trade receivable, cash and cash equivalent, like this. So let's come to the second category. Second category is basically called as the equity and liability. Okay, so what is the meaning of equity? First, let's understand. In equity, two components is coming: equity share capital and other equity. Let's understand what is the meaning of equity share capital. Take the example, I have a grocery shop and I have started with an investment of 1 lakh. And right now the total investment is around like 10 lakhs, but I have started with 1 lakh. So the 1 lakh capital what I brought at the initial stage, that is basically called as equity or equity share capital. If you see here, equity share capital, what is the meaning of that one? Initially, or the company has only invested this much amount of equity share capital, correct? Next, understand what is the meaning of other equity. Take the example, I have started like my grocery shop like 5 years back, and each year I have earned around like 1 lakh rupees. Now I have a original capital of 1 lakh, but the profit whatever I have got like during the last 5 years, that is 1 lakh into 5, that is 5 lakhs, that also I put in the company. So that 5 lakhs, the profit whatever I'm putting, that is basically coming in the other equity. Remember one thing, other things will also come, but with a common understanding point of view. So other equity is basically all the profit whatever the company is earning, so that will also come into other equity. So here is a great disclaimer. So remember one thing, again and again I'm repeating, in other equity other things also may come. So there are different like technical things are there, so that may also come. But for the time being, you remember in other equity what will come? Only reserve is coming. Reserve means all the profit, accumulated profit is coming. So if you see here, Reliance has a capital of 6339 crore, but during the last like 20-25 years, they have earned a profit of around 418245 crores, and they have accumulated that amount of money in the company. Correct? Now equity portion is clear. Now again, in the liability portion, there are two components. One is the non-current liability and another is the current liability. So what is the meaning of non-current liability? Same concept, which is non-current means which is not liable to payable within 1 year. That is basically called as non-current liability. Same current liability means which is payable within 1 year or 12 months or very short span of time. So that is basically called as the current liability. So in the non-current liability, what is happening? The first thing is financial liability. Financial liability में क्या आ रहा है? First is coming as borrowing. Borrowing is basically like the company has to expand. So due to that, they have taken a huge amount of loan. Take the example here. Just a minute, I'm sorry. Yeah, here you can see the loan is amounted to 178,751 crores. So majority borrowing they have taken during the time of Jio introduction. When they were introducing the Jio, at that time they had taken a huge amount of borrowing. Borrowing is basically from the bank, from the like public as a debenture, or from the foreign currency borrowing. So that also include. And second thing, other financial liability. Other financial liability, let's understand what other things are coming. If you see here in other financial liability, only lease liability is coming. So lease liability, you understand ki as Reliance is into the retail business, so normally they're taking a lot of property under lease because they have to open the retail shop. So that is basically coming as a lease liability. Correct? Now understanding is clear. So next thing is basically long-term provision. Long-term provision is basically amount which is payable after few years. That is basically coming. Same manner deferred tax liability and other non-current liability. Deferred tax liability एक बार remember करिए कि this liability is basically tax amount which is payable not now but in future. So that basically we are recognizing right now. Due to that, it is coming as a deferred tax liability, and which is not coming like all the non-current liability which is not coming in this category, so that is coming under the other non-current liability. Now understanding is clear. Next thing is basically current liability. What is the meaning of current liability? Again the same thing, which is payable within 1 year. That is basically called as the current liability. And what are the things are coming here? So in current liability, first thing is coming the financial liability. In the financial liability, first thing, borrowing. Borrowing is basically short-term borrowing. Take the example, they have taken a CC or you can say working capital loan, which is payable within 1 year to 1 year or 6 months. So that will also come here. Same manner like trade payable due to micro and small enterprises and other micro and small, other than the micro and small enterprises. Trade payable is basically, as Reliance is also purchasing a lot of goods from the market, so it has to pay the money to the vendor. So that is basically called as the trade payable. So again, for the reporting point of view, like they have disclosing as a micro and small enterprises and other than the micro and small enterprises. So that is coming. Second thing is basically other liabilities, which is not coming in this category, that is coming as other liability, and the total liability and total and equity and liability. So that is all about this balance sheet. So what we understand from the balance sheet, basically I will explain like how to analyze the balance sheet, but like tomorrow if you are going to the screener.com, you will not blank, you will understand what is the meaning of non-current asset, what is the meaning of current asset. Now you know actually what is the meaning of equity, what is the meaning of non-current liability, what is the meaning of current liability. That I know, that you know from this video. So that will help a lot to understand. So in my next video, what I'll do actually, like I'll be taking you to the screener.com. So that time I'll integrate the screener.com with our like this presentation, so that we can aram se analyze or we can aram se understand. So yeah, so that's all for this video. So thank you so much for watching. Have a good day. Please like and subscribe to my channel and my videos also. And yeah, thank you so much for watching. Have a good day. Bye bye.